Hello, welcome to my channel. Today I will explain about markets, what I have understood about this market over the years. I will try to explain it in a very simple manner so that it will you can relate it to your common life, what you see around, so that you will not forget the concepts. This may not be the actual way market works, but this will give you an idea like how to read the market and what to expect from the market and who are the players, how they are reacting to each other. So these are all things I'll explain. This is meant for the beginners who are just into the market. So this will give them the clear idea. If you are already experienced trader or you have experience in market, you may feel this is little you know what do you say not so professional explanation, but this is meant for the beginners. If you can see and you can understand the concepts, it's very good. You can write your comments below so that I can improve it in later videos. First question everyone asks: how market works? Market, maybe we know a market like a vegetable market or any commodity like showrooms where they sell car, or we know jewelry shops. The market you can compare to a jewelry shop, because in a vegetable shop you can only buy, you cannot sell your produce to them, or you cannot return and sell the product that you bought from the shop for a higher price in vegetable market. But in gold shop it's not the case. You can buy it for value, and in later part of day or month you can sell back based on current market value. So market is like a you can say it's like a gold shop. And this is about market, but the main concept in the market is you can make money if you know the direction of market. If you know that if market goes up you can make money, you can set yourself such a way that if market goes up you make money. And there are ways to make money even if market goes down. So the direction of market is down, you set yourself such a way that when market goes down you make money. This is how market works. So to understand why market goes up, why market goes down, this is a very big question. Even I had, and I did a lot of research. I have gone through books and a lot of videos. Then I could get it's like an auction, but auction is a very very technical term. For me initially it was very difficult to understand how this market works. So I came up with the concept of bus. In later slides of videos, in later slides in this video you'll understand what I mean to say, the bus concept. Who this video is for: anyone who wants to learn how the market really work, anyone trying to become a disciplined trader, anyone who wants to learn and avoid past mistakes, anyone confused about why reversal happen, anyone wondering why some days are market trending and some days are not so trending, it's a sideways. Because a person who is open-minded, who is ready to learn, only he can get the input of this video. If you already set some concept in your mind, and if you are not ready to learn, then this may be a waste of time for you. But I insist, give some time, open your mind and think logically. So if you get the point what I'm saying, I'm sure you'll learn a lot of things from this video. This video is not for gamblers. Gamblers are those who take decisions without any logic, without any background, without any back test. So this video is not for those. And anyone who doesn't know what mistake they did, or they don't want to learn from their mistakes. I read somewhere, or I don't know, I saw in a video, there are no unsuccessful traders in a market who is more than 6 months in the market. That means whoever is in the market for more than 6 months, they have learned a lot from their mistakes and they have corrected themselves and they have stayed there. Those who don't want to learn from their mistakes, they will not stay more than 6 months, because they will lose all their capital, they will lose their peace of mind, and they will lose their confidence. So anyone is above 6 months in the market, they have something in their their mindset to learn from their mistakes. So I'm sure you have come across this quote many times. So if you want really to learn from your mistake, sometimes even I didn't know what mistake I was doing, so I had to refer to someone, or I had to discuss with someone, so I know what is my mistake is. So this video is for those who want to learn from their mistakes. Even if you don't know what mistake you're doing, you try to understand what mistake you did and don't repeat it. That's it. The main success story of stock market is learn from your mistakes and don't repeat it. Anyone who doesn't want to learn, I think this video is not for you. So don't waste your time here. You have already wasted your money and time in stock market. So at least you can save some time not watching this video. Anyone who don't want to treat this as a business is not, it's like a day-to-day job, like where morning you go, evening you get your salary. It's not like that. Business is a game of mindset. You work for 6 months for free, and seventh month you get a salary of 1 year. It's like that. So the mindset should be of a businessman, not like a layman who works from morning to evening and expects some return to get by the evening, and he will enjoy what he gets, and the next day he starts from zero. It's not like that. Business is, you have to work hard, you have to be disciplined, wait for 6 months to get your returns. Once you get the returns, don't enjoy, don't spend everything. Use it for as an investment. Spend what you want, what you need, and don't spend for what you want. Just spend for what you need and reinvest whatever you gain, so that another 6 months you can survive without getting any profit from the markets. So, and this video is not for who is not disciplined. Discipline is a very vague word. My concept is discipline means follow the decisions what you made. Follow the decisions what you made. That's it. Follow the rules what you made. Discipline is doing what you have decided to do. That's it. Many concepts are there, many rules are there. We decide, but we don't follow. That's why we fail. The simple concept of discipline is do what you have decided to do. That's it. Then the next, why the market moves in the direction. So I came up with this concept. For example, there is a bus stop. In front of bus stop, there is a road that goes to north and south. If anyone asks a question, where this bus will go, the general question is check the board. In case if there is no board, second answer is check the driver. And if you ask the driver what he will say, I will go to any direction where I make profit. The indirect answer is I will decide which direction to go based on number of people in my bus who wants to go in that direction. For example, if in my bus 100 people are there, and out of which 70 people wants to go to north and 30 people wants to go to south, surely I will go to north because majority is for the north. So I will get a good money from the 70 people. I am not worried about these 30 people who will get away in the next stop when they know that bus is turning to north. So that is a driver's opinion. But in real market, we don't know who is a driver. So we cannot decide how many people are there in the bus, how many people are in the market, and how many people wants to go to north, how many people wants to go to south. So this is a very tricky question when you apply to market. But there is an easy way. If you see this bus stand at the T junction, you cannot decide which side it will go. But if you decide, if you based on your knowledge, you say okay, bus will go to north, but I'm not sure if it is true. So what you can do, you just walk to the north road, stay there in nearest bus stop. If bus comes to your north, then take the bus and go to north. This is the safest explanation why you should not take a trade when market is in consolidation or at the junction and it is trying to take a decision. You should not jump into the bus because you may be losing or you may be in the losing side of the majority. But the safer side is let market decide which side it wants to go. You wait until market decides the direction and you go in that same direction. This is a simple concept. If you can understand this, I'm sure 80% of market concepts are understood. But to apply this in real chart, I'll explain this later in charts. So you can understand where are these bus stops in charts, where are these bus stops in our market charts, and which are the directions we need to follow based on this majority or based on the history, which direction we should stay, north or south. These are all things I'll explain in later part of the videos. This is okay. So for example, if you know the direction, you went to north side and bus came, you caught the bus, it went to north, but is it sure that it will continue in the same direction? If you come back to this bus concept, it will stop at the next stop, bus will stop at the next stop, and there some people will get down and some people will climb up. But the driver will take a decision again. He will take the majority of total number of people inside the bus, and he will take a decision either to continue in the north. Based on the majority, he may decide to go to south. This is a simple concept. When you take a trade, it doesn't mean that you will be right always. Every trade in the next bus stop, the decisions will change. When you take a trade at the next important level, there will be a decision making time, and the decision may go against you, or decision may go in favor of you. So you have to be ready. You should know where are the next stops for the market, where are the important level next to your starting point. You should know how far is that your next bus stop. So at least you know what is your minimum profit. If you have not seen it, maybe the next stop itself, within a short time, next stop itself, there may be a decision against you. When you catch a trade, within the next level itself, the decision changed and it will go against you. So knowing the distance from your stop to the next stop, the decision making stop, the next decision making level, that is what decides your maximum profit you can book in your that trade. So the concept is every bus stop there will be a re-evaluation of number of people inside the bus, and in every important level there will be a re-evaluation whether the direction is to continue or to reverse. So this is what I explained why market continues in one direction. So based on number of people inside the bus, and based on number of people catch the bus at that bus stop, that will decide the direction. For example, if you decided to go north, bus came to north, you climbed up, and then the next stop you see that many south people, those who wanted to go to south, they get down, and the new north the people who wanted to move to north, they climb. So you are sure that the majority will continue to be north side, so you can write the correct trade. You don't have to be panic. You know the logic why it has to be a north side direction, and looking at the charts, looking at the candles, you can understand whether it was stop loss of the traders who are on wrong side of the trade, or is it a new buyers or new sellers gaining or coming inside the trade. So looking at the charts, you can read this. If you understand the concept, you can look for the cues, look for the clues in the chart, so that you can confirm, you can reassure that your decision is right, and you write the right trades instead of exiting early, or exiting your trade even though you are right because of panic, or because you don't have that conviction to stay in the trade. You may exit early. So this is a concept you need to follow. This is what you should read from the chart, so that you can stay inside the chart when it is in the right direction. Then what are the important levels? I explained there are stops where people are waiting for the bus to come, and at this stop bus driver will decide the direction of the bus. But in market chart, where are these bus stops? The main bus stops, what I have found, what I have read from books, lot of books and videos, I will explain these bus stops in next slide. These are the bus stops: pivot, EMAs, PDH, this is a previous day low, previous day high, CPR. These are the main bus stops, because you just think about it. Can you catch a bus in the middle of the road and you're staying alone? Will the bus will stop you? Will stop for you? No, right? You will know that okay, this is the direction bus is coming, and this is the bus stop where every day it was stopping, and this is a bus stop many people are waiting there, so you know that bus will stop there. And this bus stop you have not seen looking at the board, you have seen it by your experience. Yesterday also bus stop there, day before yesterday also bus stop there, so today also I will wait there until bus comes, then only I will catch. So in market, these are the levels. It is not only you, many people are watching these levels. So if you decide to follow any one method, and see that how many people are following it, see that when market comes to this level, how it is reacting. If there were no people in that levels, and if there were no traders in that level, you can see that market does not respect this level. It will go just past to it without reacting to it. You can note this in many days chart so that you get convinced that this is the level that majority of people are looking at. For example, for sure I can tell you the topmost level that every people watch, every trader, every operator watches, every institution watches. Those are previous day high, previous day low, and the third one is previous day close. And the CPR, what I'm referring, it's a type of indicator, but if you see the formula, it refers to previous day high, previous day low, and previous day close. So indirectly it calculates all the levels by itself and it gives. So majority of the traders, they follow these levels. So you can also be rest assured that you are in the right bus stop. If you follow the correct levels, you are in the right bus stops. Don't not trust what I say. You just go to the charts, put these indicators, and backtest for many days. Then you'll get convinced, and then you'll follow the rules. Because listening to someone, you'll not get conviction for that level. By seeing by yourself, then only you'll get conviction for this levels. Then you will follow confidently because that you have decided to follow that level, not somebody told you to follow that level. Okay, these are the important levels. My favorite level is PDH and PDL. CPR I follow, but as a option buyer, PDH and PDL are the important level. If you ask me why, I can give an example. Say, think like what do you say? Small vessel. You know, vessel like a walk in the edge of the walk is a PDH and PDL. The center of the walk is CPR. When things are at the center of the wok, the vessel, the cooking vessel, things will not go out because it's in that comfort zone. CPR is that comfort zone. To come out of from center to the edge, you need a lot of force to come out. You need a lot of force to push something from center to the edge. But in case if something is at the edge of the wok, they are at a very vulnerable situation. It can go anywhere, left and right. Even with the smallest push, things will go left and right. So my favorite positions are PDH and PDL. I think if you understand this concept, PDH and PDL levels are enough for any trader to survive and be successful in trading market. Why these levels are important, I told you, because not only you, many people are referring to these levels, many people are waiting at these levels, and they have been waiting, they have been following these levels for many years. So you can see, you can backtest these levels every time. At this level, some reaction will happen, some decisions are being made, some reversals are being happening at this level. So I feel this is the only levels you need to follow to become a successful trader. So this I explained you CPR, PDL, and when that particular level is being accepted by the market, it will continue in the direction. If in that particular level, if people are there that change the direction of this bus or change the direction of this market, then market will start reversing. These all things you can read from the charts. I will show you I'll explain this to you, but you can backtest yourself. Put all these levels in your chart, then you can backtest yourself. The same thing I explained why market reverses. For example, the everyday the important stops, important zones, and market goes and re-evaluate its passengers based on majority it moves. For your surprise, there may be a bus stop where there is a big carnival is going on. There may be a big supply zone or there may be a big demand zone that is not your regular stop. There is not your normal PDH PDL. It's a month high, month low, year high, year low, or some special zone where a lot of people are waiting. And when my bus comes in that particular direction, based on majority, it may reverse the direction. Sometimes you may say, okay, I'm following this bus stop concept, but in one particular level, there is no level that you can see, but market reverse from that level. Then you should see around, you should see, go back to bigger time frame, or you should go back to another index. For example, Nifty, you're seeing a reversal, but you don't know, you don't have any level in that Nifty. You change this 5 minutes time frame to 1 day time frame, 1 week, but still you don't see a level, why it has reversed. Then you should check to Bank Nifty. In Bank Nifty, if you go, you can find out that because of Bank Nifty at particular level, market has reversed and Nifty is following Bank Nifty. So this is the way to analyze any chart, any reversal in a chart. Don't just blindly believe that okay, market has reversed because some random operator was there. No, you should know why it has reversed, which indicator, which level reacted at that particular level. Then only you'll understand the market. You'll understand the supply zone, the demand zone, and why it has reversed. I will explain you another beautiful concept later part of the video, that you don't see indicator is showing the level. You don't see any chart showing the level. It is just a number. The number itself is a important level. For example, the whole numbers in Nifty, whole numbers in Bank Nifty. These are very important levels. People say, why this is whole number? Why not any random number can be important? Why not be a operator number? I've seen many people saying that some fancy numbers as operator numbers. The logic for this whole number is, for example, in January, if a big operator person wants to sell an option for December expiry, if you go and check the December expiry chart, you will not see liquidity in all the numbers, all the strike prices. You will see liquidity only at the whole number. For example, 25,000, 26,000, 27,000, like that. It is not because operator likes some number. It is because there is no liquidity, so he is forced to sell only the whole number area strike prices, like 25,500 or 26,000, like that. So when market comes to those particular whole number levels, it reacts. May not be a whole number in Nifty, but it may be a whole number in Bank Nifty. So when market reacts to this whole number in Bank Nifty, Nifty also follows same thing, because at this level there are many operators are waiting to market to reach there, so that their orders get filled or they can get out of their position. All things happens at this particular number. So the important levels are not only the things you see in the chart, but these are the important numbers also. So this is what the concept, why market reverses from particular direction, because there may be a majority of people waiting there for a long time to market to reach there, and they can get out of their position, or they can start a new position. Okay, what is breakout or liquidity grab? In market concept, if I say market is making higher high, market is going up and up, and you see a board saying that this is the fastest route to new high. You see that candles are making a big green candles. You read it at okay, this is a continuation of uptrend, but you don't know that there is a big demand zone, big supply zone in front of you, that you are not able to read it. You read just a chart. You, like in this image, you are reading just a signboard, and you're claiming that you are catching the bus thinking it will go to the north, but behind you can see barricades. There's a big supply zone that you didn't see because you were reading only the signboards, not the actual scene at the market, scene at the road. This is what happens if you see a big consolidation. You know that both sides there are sellers and buyers, and both sides there are stop losses are accumulated. In between, if you see a big spike in one direction, then you think okay, this is a breakout, so I will go in that direction. But this could be a false breakout, because for example, in a consolidation, big seller wants to sell its many positions, but in consolidation he is not getting that much of buyers to sell his options. So what he will do, he need more buyers so that he can sell his all the quantities. What he will do, he will take market up. When he take market up means beyond this consolidation range, whoever is bought, whoever is sold, they have their stop loss above this consolidation area, and their stop losses are little above this consolidation area. That is a buy order. So the seller's stop loss is a buy order. It is just above this consolidation area. This spike, when it happened towards this upside consolidation area, it takes the stop loss of all the sellers. That means all the buy orders get triggered. All the stop loss of buyers, the sell order get triggered, and all the stop loss of sellers, that's buy order, get triggered, and this big seller, he gets the liquidity to sell all his position to all these buyers whose stop loss got hit. So is all the order is filled, so market will go down. So his orders are fulfilled now, so he can take the market down. That's why you should not believe the first breakout from a consolidation area, or you should not take a trade based on the ongoing candle. Wait for candle close. At the candle close, you will know the direction. You can see a big wick coming out of this consolidation area, so that is a false breakout. Maybe I have explained you a little bit in confusion. I just explain it again. Consolidation area, and the top there are sellers, bottom there are buyers, and top sellers, they have their stop loss above the consolidation area, that is a buy order. Top there are sellers, and above this consolidation area there is a stop loss, that is a buy orders. If a big seller, he wants to sell all his position, he need a big buyer's pool. Where he can get this buyer's pool? That is the above consolidation area, the stop loss of sellers. So he will take the market above this consolidation area, trigger stop loss of all the sellers, that is buy order. He fulfills his sell orders for this buyer's pool. He finishes all his orders, then he takes the market down. So this is what the false breakout. So just give you my chart settings. This is how my chart will look like. There will be a CPR at the center, and there is a PDH and PDL, the yellow lines, and the pivot lines R1, R2, S1, S2. So this is what it would look like, and there is a EMA 20, 50, 100, 200. And my main concept in option buying is, you can see this you can see this, the level, this is called CPR, and this CPR should be less than 20. I have I have studied along many charts, then I noticed less than 20 is the day where there will be a trending day. So trending day is the only friend of option buyers. So in a year, you can check, you can backtest how many less than 20 CPR days were there. Out of less than 20, how many were trending days? Then you will get amazed that you don't need any other days to trade. You just need to trade these less than 20 CPR days only. And these CPR days, this is not for scalping where you'll get 20-30 points. In this particular days, the options will go up to 3x from the day's low of that particular strike price. That's it. So you don't have to look for many indicators, many trading days, daily trading days. No, you just trade the days where CPR is less than 20. And in that CPR days, there is one more if I add one more condition. If market opens at PDH nearby or PDH nearby, if market opens here, this will be your highest conviction date, because this is that edge of the walk. If you see in a kitchen, if you see a walk will look like this, and this is the edge of the walk. This is the edge of the walk. This is your PDH, and this is your PDL, and this is your CPR. So things are here. When things are here, it is very difficult to move out. Things are here, difficult to move out. But the things are here, you just need a little push. It will go out, it will go in with the full speed. That's what I'm trying to explain here. PDH and PDL levels are enough. If you are mastering these two levels, that will make your life. I'm not CPR is there to indicate like how big is the walk is. If it is like this, the walk is like this. If the CPR is very far, like the bigger, you can say CPR is greater than 60. Greater than 60, the walk, what I would draw is like this. The walk is like this. This is that greater than 60 CPR day. Walk, if you don't know, you can Google it. It's a kitchen utensil where we cook things in that wok. It's like this wok is very, the slope is very shallow, and this is PDH and this is PDL. You can imagine, even if you give a push, the momentum, the speed of the things moving to the center or moving away will be very low. But in narrow CPR day, it will be like this. Slope is very steep. Even a little push, it will give a big momentum. So I will say trade only less than 20 CPR. Don't buy more than 60 CPR days. Don't buy options, but more than 60 you can use it for selling. If you have enough capital, you can plan for selling. Since I'm concentrating on buying, I will just insist, don't trade in more than 60 CPR days, just trade only on less than 20 years CPR days. Okay, so this is that just wanted to show you the bigger CPR days. This is that greater than 40 CPR. CPR is greater than 40. You can plan. If you know this is going to be a sideways days, you can plan very well. You can sell, you can fade the edges. So there are many options, but too many things will confuse everyone. So follow one thing, one rule for success. Don't follow many rules, then you'll get confused. So just want to show you the levels R1, R2. In what I have observed, in less than 20 CPR days, market moves two steps. Two steps means from here, if it starts, it will go here and here. If it starts from here, it will go from here to here. This is a one step, and this is a two step. You can just backtest this. Even in options, you know that this is backtest. If market comes here and you are making position, don't panic. You can set a target for here and stop losses every 15 minutes candle low. So even if market reverses, you'll get something, and if it market reaches to this your direction, your level, you can book the full profit. Just to give you an idea of option buyers and option sellers, where they make money. If you consider this as a chart, and market can go anywhere like this, market can go like this, market can go like this, like this. If you see this chart, you can see, let me erase this. If you see, this is that area where C buyers make money. This is very small portion. This is, you can say, out of 1 2 3 4, only 25% of the time C buyers make money, and remaining 75% of time C sellers make money. Same thing, a market goes in this direction, that time only P buyers make money. That is only 25% time. 25% time, and C P sellers make money. This is the 75% of time. So you can see the percentage probability for the option buyers is very low. What does it mean? This means you should not trade daily. If you trade daily, there is a 70% chance that you will lose money. But if you understand, if you try to fine-tune your trading, fine-tune your trading days, and you trade only, for example, out of 100 days, if the 75% loss means it will be 75 days loss, but you, out of this 100 days, you decide you'll trade only 10 days based on your CPR, everything you decide only 10 days. Even if your loss at 75%, that means 7 days only, and the 3 days, whatever 3 days you get, that will cover your 7 days loss, plus you'll give a profit also. So don't trade every day. The goal of this slide is, if you are option buyer, don't trade every day. Select your days. It should not be more than 30%. For example, if you are planning to trade 20 days a month, then you should not trade more than 7 days in a month. This is a top line. So the next question, which are all days I can trade? Answer is, find out less than 20 CPR days. That is your first filter. Then less than 20 CPR days, you get maybe 5 or 6 days. But still, don't take a trade if market is opening at CPR level, that is its comfort zone. Don't take trade on that CPR day. So the second filter is, take a trade only if market is at the edge, PDH, PDL level or somewhere. So these are the two filters that can filter out all the noise out of 20 you may get 3 or 4 trading days. That's enough for you. Some people will say, I want to trade really, I want to become millionaire, or I want to become crorepati. And just give you mathematics. If you can double your capital in one trade, if you double your capital in one trade, you just need around 8 trades to become crorepati from your 50,000 capital. You can do the maths. Just go to ChatGPT and ask, give me 2x of 50k. How many times, if you repeat this, it will become crores? It will give. So you need just 8 trade to become a crorepati in a year. You just need 8 trades. That means that much low number of days, which can give you 2x. That makes you a crorepati. I'm telling you not to, just to exaggerate. I'm just telling you, you don't have to trade every day. You don't have to look for trading signals every day. Just stick to your rules, stick to your plans, be disciplined, decide what you decided to do what you decided to do. So that's it. So in a 8 trades, you can achieve your financial freedom. Hope you like this video. If you have any doubts, you can comment. If some concept is not clear, you can mention in the comments. I insist you watch this video every week, so that this sticks inside your brain. It's inside your consciousness. So whenever you see a chart, you will remember why it is there, what it is doing, and what it is telling you. If those questions you get answers from the chart, that means you have understood this concept clearly. And when you see a chart and you don't know what it is telling you, then I think you need to go back to this video, go through each slides, see why market is doing what it is doing, find out the reason, what is it telling you, why it is reversing, why it is continuing. Everything you can study. You can follow this method to understand. We can visualize the concepts, so you'll never forget it. Thank you for watching.